Welcome, everyone. This is the fifth month update of the challenge. In total, we have a profit of $44,573. I've already exported the data to Excel, and our net profit for this month alone, just month five, is $9,747. I had a higher profit last month, but this time around, the market volatility probably wasn't as high. As I mentioned in the last video, I was planning to disable full modes. However, I haven't done it yet because disabling them requires closing active positions. For instance, the link pair is currently in full mode. SUI is also in full mode, but Arbitrum likely isn't. If I close these manually right now, I'll take a loss. I want to pause these pairs when the market conditions are right, so the loss is minimal. My plan is to simply remove the pairs once they clear these large positions. If any small positions are left over, the bot will close them on its own. The issue with full modes is that they increase drawdown. So I think removing them is the right move. It will reduce drawdown and leave us strictly on partial modes. I'm just waiting for the right moment to close. I'll pause the pairs and wait for the best window, specifically when the position size is small. From there, I can either close those tiny remaining positions manually or just let them ride and close automatically. The bot sets a take profit target, so the price movement should eventually close them out unless the market takes a massive turn against us. Like I said, full modes hold on to positions for a long time and it doesn't really work well for scalp trading. It basically holds one massive position and waits for its take profit target. That's why I'm saying removing them is for the best. It's going to help keep drawdown in check. I don't have many other updates for this video, except that I'm currently working on backtesting. Specifically, I'm backtesting some strategic updates. This backtest isn't fully ready yet. I want to introduce quite a few changes and improvements to make the system much more robust and dynamic. The trades you see here, well, I haven't finished these tests and backtests yet. I've actually spent about 4 weeks just working on the core engine, building a proper simulation engine to make sure everything functions accurately. I'm talking about the exchange engine, in this case, the Bybit engine. Currently, the bot is running smoothly and the trades you see here are accurate. However, I am still refining the trading mechanisms and testing different logic to see how much of an edge they provide and how profitable they actually are. I wouldn't say I'm making massive changes just yet. These simulations are purely to help me identify which features will give the system a true edge. Take these pairs here. I'm still working on them, but I can show you what's happening. These are the trades. The blue lines represent the spikes, showing the maximum position size reached. As you can see, wherever there's a spike, it's that the size drops rapidly because positions are closing and reducing the overall exposure. This illustration displays the trades very clearly. The yellow line is the EMA. I'm testing the EMA as well to see how much it improves the trades, the overall bot system, and the entire setup with these new mechanisms. Let me show you the trades here and how the bot reacts and trades on each specific pair. In this section where the red lines are, you can see the spikes go up and then pull back. The red represents shorts while the blue represents longs. If we hover the cursor over them, it brings up the data for that specific day. This chart shows exactly what I've been testing recently. You get a full view of the bot's reaction to price action, how it trades, and how it dynamically opens positions. I also want to clarify exactly what I'm testing. My goal is to strengthen the bot so it can handle the vastly different price movements of both bull runs and bear markets. We have trending markets, strong trends, and ranges. Price action behaves completely differently in a bull market versus a bear market. Strong trends are especially common during a bull run, so the bot needs to be resilient and equipped with the right mechanisms. I'm refining the system specifically so that it has tailored logic for both bull runs and bear markets, making it more robust, dynamic, and profitable. Ultimately, the system needs to maintain an edge and be fully prepared for any market scenario. My main focus is on maximizing profitability. From my testing so far, using the yellow line, which represents the weekly EMA, I've been playing around with simple rules, like doing one thing when price is above the EMA and another when it's below. But honestly, from what I can see, these basic rules don't really give us much of an edge and aren't that useful. Instead, I've been exploring mechanisms tied to areas with a higher probability of price reversal. For example, most traders know that on the RSI, there's always a chance of a pullback once it hits 70 on any time frame. However, in practice, the probability of a true reversal is much higher once it gets to 90, specifically in the 90 to 95 range. Since I know this, I'm testing a mechanism where if the RSI on a higher time frame goes above 80 or 90, the take profit percentage gets boosted. By giving the bot permission to increase the take profit percentage right, where a reversal is highly likely, we can leverage that momentum to lock in more gains. I've set up specific ranges. Around the 70 zone, the take profit gets a small boost. If it's hovering in the 80 range, it increases further. And above 90, it gets highly aggressive, scaling up to around 3%. Looking at the logs, this mechanism is working great, but it's not the only thing I'm working on. I'm also testing a dynamic take profit scaling mechanism, which I definitely plan to implement in the live bot. While boosting take profits based on RSI zones gives us one type of advantage, scaling the take profits gives us another. For context, in our current setup, if ladders get stuck, and let's say a long position is stuck, the take profit only scales in one direction. Right now, I'm testing a formula that compares which ladders are further out of the money, the longs or the shorts. Whichever ladders are further away, those are the ones that get scaled. This is much more logical because the position that is stuck the deepest is the one we need to protect. You could try to scale the one that's easier to close, but in this case, it's far better to target the furthest ladder out, whether it's a short or a long, and scale that one instead. These two options are already showing a clear edge in the logs. However, that's not enough. I want to make even bigger structural changes. The market shifts so drastically between bull runs and bear markets, and I want to exploit those phases. For example, during a strong one sided bull run, the take profit needs to scale up intelligently so we capture maximum profit instead of getting stopped out or taking early exits. I want the bot to actively leverage the specific characteristics of both bull runs and bear markets to gain a massive competitive edge. That is exactly what I am focusing on right now. And that wraps up this update. I can't go into more details on the simulation just yet since it's still running and I'm actively analyzing the data. I don't want to make any definitive claims before it's fully complete. See you in the next one.